hot for you. We'll talk about Nvidia, the earnings, the market reaction, what's next. We'll talk about the path that Palantir took, going up and down the roller coaster, and what's next for Palantir. We'll talk about the Trump tariffs, the Salesforce miss, and also, of course, Tesla. What's going on with Tesla? What's the future of Tesla? Also, at the end of the video, I'll tell you why I removed a big, huge, massive Mag 7 stock from my top 25 stocks list, and I'll explain why I did it and why I think it has a lot of risk. Nobody's talking about that. A lot to come to today's video. Let's get started. I know everybody's talking about the Trump tariffs right now. The EU is being tariffed 25% allegedly. That's just an idea. He floated it. Whether that's real or not with Trump, it's really hard to say. A lot of uncertainty. Now, when you introduce uncertainty to the stock market, it usually causes a negative reaction. It's not the first time we see it. Uncertainty means risk. Risk gets priced in. Stock markets drop. That's what you've seen in the past few days. Because people fear that the risk is going to manifest itself in trade wars, which is going to get inflation up. Inflation going up means we might get to stagflation, means we might get to recession. So that's the fear. The track record of Donald Trump shows us that he is really, really good at bending, but not breaking the stick, so to speak. So he's good with playing the game and being an agent of chaos, but to an extent. Right now, the markets have not collapsed, which means that the markets believe that the Donald Trump isn't going to break the market. It's going to stop at some point before it gets too late. And I tend to be in the same camp. I don't think he's an irrational player. I think he's going to use this to create leverage and then at some point stop, and then the markets will rally. And all the doubters that sold off are going to lose out on the massive explosion of profits. Let's call it this way. I was about to say something else. Now, again, with Trump, there's no certainty that that's going to happen, but that's what I think might happen. Now, if you like Donald Trump, dislike Donald Trump, it's irrelevant. My sentiments are irrelevant. The market doesn't care and Trump doesn't care. Whatever happens, we have to analyze both scenarios without going into politics and our own personal preference.
I actually like what Tom's saying right here. And it's not to blow smoke up your backside, Tom, but to his point, right? You need to have your own plan. You need to execute what your plan is and be emotionless about it because, and before we get into that, before we get too deep, right? This is one of the things that I'm really trying to make sure as we put on trades now that I want to get across to you, right? When you put on a trade, you should have no expectations of the outcome. Now, I know that might break your brain right there, but the expectation is something is going to happen. I don't know what. So I'm not going to expect to win. I'm not going to expect to lose. I'm just going to expect something to happen. I would also say that there are no profit targets, right? If I have a profit target and say, I want to make round numbers, I want to make $100 on this trade, right? If I make that $100, sweet. Does that mean I get out? Or what if I never make that $100? What if it's like AMD, and it's only going down and seems like it will only go down for the rest of time. Currently, it's down nearly 4% right now. Let's say you had a profit target on AMD of it to go to 120. Right? You may be holding AMD to get to 120 for the next 17 years. I mean, obviously exaggeration, but that's the point, right? By not having an expectation, not having a profit target, then you just know I have a plan to get out when one of my exit signals happens, and I am indifferent to the outcome. And I know that that's going to break your brain. I know that you're probably thinking, this Chris guy's so full of crap. But this is the way right here to be successful in the market. Do not have an expectation on what will happen. Do not hope and pray and dream and start pricing Lambos when you put on a trade, because we don't know if you're going to make a little, if you're going to make a lot, or if you're going to be scratch, or if you're going to lose a little. And you certainly should never lose a lot. We don't know what's going to happen, and you shouldn't put that expectation on the trade, because once you attach an expectation to the trade, you become emotionally involved on the trade. When you become emotionally involved on the trade, you can make some really bad choices, really, really bad choices, like digging your heels in and screaming at the top of your lungs to everyone who will listen to buy AMD, even though Chris is new on the scene and has been telling people for months at this point, stay away from AMD like it's no one's business, right? I drew on here a black line showing lower lows and lower highs. There is nothing bullish about this. This is probably this and Tesla are probably the least bullish stocks I could ever come across right now. They're awful. So back to Tom's video.
You have to separate your emotions and what you feel about Donald Trump versus the reality of what might happen to the stock market.
So just tell me, after this earnings report, why aren't we seeing a bigger pop out of Nvidia? And in general, do you think we're still seeing kind of a deep-seek overhang on this company?
$39 billion of revenue, data center growth of insane proportions, not as fast, not as much as the last quarter, I get it, but still almost 100% growth in data center. The Q1 guidance is $43 billion, which is again above expectations. The demand is strong. $15 billion of free cash flow for this quarter, 80% year-over-year revenue growth. The stock price somehow after that remains flat, completely flat. That is weird. What's going on? What's happening? Well, here's the thing. You look at the stock price and you have to understand that despite all of these great numbers,
Of course, this is a little bit older video. Price is now down 7% on Nvidia.
just told you about. And even if you add some more fundamentals, like the fact that margins still remain very, very strong at 70%. I told you in yesterday's video that Nvidia's margins are going to be the canary in the coal mine. The minute you see margin erosion of Nvidia, that's the minute you know competition is actually getting closer. At 70% gross margin, nobody's catching them. That is monopoly numbers. Again, Nvidia isn't going to do 150% revenue growth year over year forever. Obviously, that's never going to happen. At some point, they will slow down, but they will remain dominant. It's not Cisco. This isn't telecom. This isn't 1999. It isn't. Explaining you why is very, very simple. In telecom, the capex cycle, the investment in the infrastructure required to go from telephones to internet was a one-time thing. And then you have to kind of upgrade it along the years, but nothing major. It's telecom. It moves slow. In AI, the level of AI development and the compute required to push all these new models further and further, the cycles are never going to end. The H100, the H200, and then the H300, 400, 500. NVIDIA keep doing this like a money printer. They're not going away. However, although they will remain dominant, obviously, with the adoption of AI going through the roof, and this cycle is not even in its diapers yet, still, you have to understand that a lot of expectations were put on NVIDIA's shoulder for these earnings. Mm-hmm. People expected to be wowed. And just like Aswad the Mother and...
Yeah, that's a really good point, right? People look at what happened to NVIDIA in the last several months, and they're like, well, of course it has to happen again. Even Mahesh, our CEO here at Outlier, he was like, Chris, and this was on this was 30 or 90 days ago on the last earnings call. He's like, Chris, should I buy calls or puts or both? I was like, what? He's like, what I want to do is an at the money straddle. And I'm like, bro, you're going to literally pay a buttload of money for these options, and it may not do anything, and you're just going to watch it evaporate overnight. But that's because people have come to expect big moves out of NVIDIA and big, upside moves out of NVIDIA. And today, it's now down 7% post earnings. And I think Tom nailed it personally. I think Tom nailed it because people are so complacent with NVIDIA being like this money printer, right? You put money in, you get money, you get more money back out, like they were with Tesla a few years ago. I remember it was like 2021, 2022 ish, had to be 2021. That was when everybody got their stimmy checks. Yeah, you remember. Everybody got their stimmy checks, and Tesla was just like going to the moon, right? Teenagers were talking about how much they were financial geniuses, and all they had to do was buy Tesla. And then it fell out of favor. Right? It fell out of favor really bad for a long time, for a long, long, long time. And then it caught a bid, and now it's falling out of favor again. So let's keep on.
Said in yesterday's video where I showed you guys that clip from CNBC, and I told you, as well as saying, they're going to beat across the board, but the stock isn't going to go through the roof because the expectations are not realistic. That's exactly what happened. Short term, the market wanted to be wowed. But at this point, NVIDIA almost can't do anything at this point to wow people because they've already done it a million times before.
That's such a good point. This is a buy the rumor, sell the news situation. Buy the rumor, meaning that people are excited. They have the expectation that it's going to go up. And then when news hits, it's down 7%. Right? When the news comes out, it's down 7%. And Randy's got a great point. And this is the reason why I really want to avoid trading through earnings at all costs. Because NVIDIA destroys on earnings, and then it goes down. Palantir has decent earnings, and then it skyrockets. Right? Or you can look at something like Celsius, which everybody was super stoked because this was a Jeremy pick. And they're like, oh my God, it's up 30%. And then it's back. It has round tripped that move in 5 days. Right? Earnings can be so much of a gamble. And when I put my money in the market, I don't want to gamble.
Now, long term, no problem. Nvidia is going to be a monopoly in a very, very good market. No problems in Nvidia long term. Short term volatility is fine. Nvidia just went through the roof. They need to come back down to earth a little bit, settle down before the next wave, which is going to come. Now, my end of year target for Nvidia is actually between $150 and $170 per share. So that's still very, very bullish.
Okay. Tom has a target of 150 to 170 per share. I'm not saying it can't hit it, but I'm saying it's struggling right here. It has really struggled in this range between, let's do, where do we call this at? Let's go from this low to this high. This range from 115 up to 150, basically. It's really struggled to break out of that either direction. It's going to take something special to get through there. And to Tom's point, right? People have been expecting special every single day, every single announcement that comes out of Nvidia. And if they got this earnings announcement and this is the best that can come out of it, I'm not sure that profit target's going to get hit. And here's the thing. I mentioned this earlier, right? Anchoring to a profit target can emotionally bind you to a stock when you ought not need to be.
In my opinion, I have a lot of faith in Jensen. I have a lot of faith in technology and in AI adoption. I think the CapEx story, the infrastructure story is far from over. And I also believe it's going to be cyclical and it's not going to end once this cycle ends. So my target, 150 to 170 to end of year, extremely bullish. Now, let's move on to Palantir. Now, I get it. It's unpleasant to go from 80 to 120 back down to 90.
Tom's here for his usual 2 score.
It's painful. It's not pleasant for anybody. I'm not going to sugarcoat it and say it was fun. Obviously, it's not fun, but you have to understand what's going on here in order to analyze this professionally, logically, and not emotionally. Look, the circus came to town. The circus left town. When the stock goes from 80 to 120 and then back to 90 in 3 weeks, obviously something not normal happened. A lot of
Yeah, no joke. Something not normal definitely happened. You got this 50% move up. Good Lord, I didn't realize it was that high. 50% move up, and then the 32% move right back down. Crazy move right there. But we've talked about this many times specifically, right? If you had been following it, you might have been able to get out with the sell signal right there. I believe Outlier had the sell signal like the day after the top. Let me go to it real quick. But even if you hadn't been following Outlier, and you don't have to, right? What I want to teach you here is chart reading. And I'm going to pull up my exit signals. My exit signal would have been a 10 EMA broken, right? A close under the 20 or 10 EMA. Now the sell signal came on. Sell signal came on February 13th. So it was this candle here. So near the top. Sell signal came there. My closing signal, had I only been reading charts, would have been right there. I might have kept it on. It depends. But certainly, absolutely no doubt whatsoever, I would have closed right there. And so that's the difference between, longer term investing and shorter term trading, right? We both have the same objective here, but whenever the trend is bending, you can read it, right? Here's a cheat sheet for you. If it breaks the 10 EMA, that's the indicator of the short-term trend. Any stock that you see in a beautiful, brilliant uptrend is 100% of the time above the 10 EMA because it's math. It's higher than the average price over the last 10 days. And as it goes up, it's going to trail along with it. But then it'll let you know when that trend starts to bend, and it's certainly been really hard on Palantir.
The trash, the traders, the day traders, the opportunists, the speculants, the circus. It came to town. It took the stock from 80 to 120 in 2 weeks. And then they jump to the next thing or they jump ship. That's what they do. They're not long-term investors. They're opportunists. They came in, they enjoyed themselves, they made a nice profit, and they left. On to the next thing, right? That's fine. But the stock is still at $90 per share, and it's still up from the $24 that we had just a year ago. In 1 year, the stock went from $24 to $90. I don't think any of us can sit.
That is bonkers. This kind of move is so rare, ultra bonkers.
Here and complain about the stock performance over the past year. It's all good. The stock is still up 20% of the last month, even after the drop. Now I get it. These traders came in, they made their 20%, 30%, whatever the case may be. It doesn't matter. I mean, they lose some, they win some, they get by.
Dang, Tom watches our videos. He knows. You make a buck, you lose a buck, you move on.
None of them will ever make 20x like we did on Palantir.
Hands down, hand to God, Tom is right. I will never make 20x on Palantir because I'm not holding it that long. He is 100,000% right. I will give you that, Tom, all day long.
Here over the past 3 years. If we sit back and relax and enjoy ourselves and watch our performance versus the traders of the past few years, they're not even close, not even the same realm. Okay. Now, look, institutional investors are still buying Palantir heavily. Look at the filings. Margins are still great. Profitability are still great. Now, the growth of revenue isn't slowing down. Don't tell me this BS about the Hexeth 8% cut in the defense spending. It has nothing to do with Palantir and AI. Even if it passes, commercial adoption is going through the roof. Can't slow down. They just got added to the S&P 500, and that's why my price target for Palantir for the end of the year is 130 to 140 per share.
Ooh, he's still really bullish on it. 130, 140. 130, 140. Another, if we split the difference, 135-ish. That gets you at basically a 60% gain additionally from here. Now, here's the thing I want to put out there. I want to put this out there all day because he could be totally right. He could be totally right. But here's the deal. When that happens, right? When that happens, let's say you want to buy it at, let's say 83. Or no, let's use a round number. Let's say you want to get in at 80, okay? Don't buy it on its way down to 80. Do not buy it this way to 80, okay? Because we don't know where that's going to go. If you are hell-bent on saying, I have to buy it at 80, oh man, I just removed all my annotations. Do 2 seconds here. Let's say if you're hell-bent that I have to buy it at 80, wait until it tells you the bottom is in and it starts going back up. Now, how would you know? I'm asking you, the outliers. I'm asking you in the chat, how would you know if the trend is moving up again? I'm quizzing you on this, and I want to get your feedback because I see people in the comments. I see people on the, I don't know, all over the place talking about how you can't predict a stock's price. And day to day, you probably can't. But you can do one thing. You can, hands down, no matter what, whatsoever, until the end of time, use the 10, 20, 50 outlier trend template to know when it ends and when it begins. 3 green candles is actually pretty good too. Absolutely. The 10 over the 20, price over the 50. You guys got it. You guys got it. Right. That's just the math. That's the short-term moving average over the intermediate term moving average, price over the longer term moving average. And as of today, Palantir is currently in a downtrend. Now, always keep in mind that this downtrend, it may feel brutal right now. And so you're like, oh, I have to get in. It's already been beat up. I have to get in today. Never forget AMD. We need to have like a never forget, like Martina McBride thing in the background. Never forget AMD. The once $200 something stock AMD, which is now a $100.17 stock AMD. Never forget.
I think they still have a lot of runway, but it's going to take time. It's going to take 8-9 months to get there. That's fine. I'm not interested in the day traders pumping my stock. They've done it before, taking us from 10 to 35, and then we dropped all the way to 6. They left. They came in. They did it again. They left. Good riddance. Let's move on to the next thing. Now, the Tesla story is driving a lot of investors insane. I'm getting a lot of questions about Tesla. Tom, what's going on with Tesla? What's up? I want you to use the same logic I just used on Palantir and apply it to the Tesla situation. Let's all be grown-ups here, okay? Now, whether you like Elon Musk, you hate Elon Musk, I don't care.
I actually like Elon. I think he's a cool dude. I am absolutely based. I'm based as based could be. I drive a Tesla. I live in Texas. Based
It's a stock. Let's analyze it like grown-ups with no emotions, right? It's down a lot over the past month. It's down a lot over the past 5 days. Sentiment is in the toilet. I totally get it. So the first thing you do when that happens is you zoom out. Okay, let's zoom out for 1 year. Not telling you to go to the IPO. Let's zoom out 1 year ago. 1 year ago to right now, the stock is up 50%. Not too shabby. 50% in a single year for $1 trillion company? Not bad. Now, there's a lot of short-term panic. I get it. People talking about demand for EVs, for Tesla EVs coming down. Competition is coming for their lunch. I get it. Elon bad. Elon is distracted because of Doge. I totally understand these arguments, and they carry a lot of water. It just, I have a weird deja vu. When Elon took over Twitter, made it X, all the same people who are telling you now that he's being distracted, we're telling you, well, Twitter is going to distract Elon. He comes in, fires 80% of the people, stabilizes it, appoints a CEO. It's doing better than ever. And then the Tesla stock has done 50% since. So, learn some history. It's not the first time people doubt the level of multitasking
I think Tom's based too. Just putting that out there.
that Elon can handle. No, not the first time and not the last time, but I'm not going to be one of them people. I think that he can do it. Now, long term, if you look at Tesla, from a logical perspective, a lot of upside. You got humanoid robotics, which is going to be huge. You've got the AI, FSD, full self-driving, autonomous driving, which they can sell to OEMs at 80% gross margin. I think they're monopolizing that as we speak. They don't even have a second place at this point. Some people have ran some models and some tests in cities here and there, Waymo this, Waymo that, London Wave, whatever. Nobody has the miles that Tesla has to build a truly autonomous driving system. And I think they're going to be the first to do it. At that point, it's game over, right? We got the energy business growing 100% per year. Plus, they're still going to sell a lot of electric vehicles, even if competition comes from China. So it is volatile. It's going to continue to be volatile, but it still has a massive, massive opportunity to make a lot of money long term. In fact, I believe Tesla might be one of the best stocks to invest in right now, given the setup and given the negative sentiment. Now, a lot of...
And this is where Tom and I are going to have to disagree real hard. Because to me, this looks like a stage 4 downtrend with almost no reservation to me. I mean, if we look over here, this is July of 2024. This sideways trend right here is a perfect example of a stage 1 right there. And then a stage 2 uptrend, a stage 3 consolidation trend when the moving averages start crossing over. I mean, this is like going to the optometrist and they got those, giant fun binoculars on top of you, right? And they're like, is it better 1 or better 2? Better 1 or better 2? And you're like, they're both equally bad. It's a stage 4 downtrend, right? That's what I would be saying right now. So yeah, it's about to round trip. Like it's round tripped all the way. This is crazy talk to me. This is crazy talk. It went up 64% in the span of 27 days, which is bonkers. And then it's back down 42% in the span of 46 days. I mean, this is a beautiful stock to trade, right? This is we talked about the 10 moving average. Like when did it cross under the 10 moving average, right? Just looking at the 10 moving average, it crossed right here. Boom, up. Let's say you go from the close right there. And then it closed under. That's okay. You know what? You make a buck, you lose a buck, no big deal. You could get right back in the very next day. And then when's the next time it closed under? That got really close. It might have, if you want to be very pedantic, but we'll skip that one. And the first time it like solidly closed under was right there. Right. Now, to Tom's point, I'm never going to have a 22x return on this. Never going to happen. Not at all. But in the process, I might lose $15 there. But I might gain $169 on that side. And the most important thing is I didn't have to follow it back down. Can't we just get along? I know. And that's why I think it's going to be fun to have this conversation with Tom, because I'm going to be like, what are you talking about? Because for him, this is, and this is his words, right? I'll go back. I'm not going to speak for him.
It still has a massive, massive opportunity to make a lot of money long term. In fact, I believe Tesla might be one of the best stocks to invest in right now, given the...
And that's okay, because I completely disagree. And that actually right there is what makes the market. There's going to be people like Tom who says, I want to own this. And there's going to be people like me who say, I want to sell this. And that is exactly how the market is made. I think that's kind of cool, actually.
Setup and given the negative sentiment. Now, a lot of things happened over the past few weeks that have scared people. And a lot of people talk about Tesla this, Tesla that. I get it. But at some point, you have to be a grown-up. Let's talk about Tesla long term. Elon bad, Elon good, and all that stuff. Let's put it to the sideline here, right? Tesla right now, to me, looks like a $500 to $550 stock by the end of the year.
Dang. That's a double from here. 283. So Tom's target by the end of this year, let's call it 5.25. I mean, something crazy would have to happen. But then again, Tesla makes these crazy moves. Brian's like, based on what? Impossible. Sorry, that's wishful. Look, Tom, I didn't say that. They said it.
Which is a very lucrative investment opportunity. Not even talking about long term. This is a $1,400, $1,500 stock over the next 3 years. So I'm very, very bullish on Tesla. Now, of course, we have to talk about CRM. CRM have basically pooped the bed. I haven't talked about that stock in a while. Made a video about them a couple years ago, said I was bullish. The people made a lot of money on that video, but that's besides the point. They missed earnings slightly. They beat on EPS. They missed on revenue, and only 7.6% revenue growth year over year. That's very, very slow, slower than last year. Guidance miss, just shy of $10 billion for Q1. And they have a lot of competition breathing down their neck. They're still strong. Don't get me wrong. I'm not saying that they're over, they're finished. That's not what I'm saying. But I'm saying that they have an unclear AI strategy, some AI strategy, but not clear how good it is and what it's going to do to business. This growth, 7.6%, is not amazing, and lots of competition, which means that we're doing kind of this yellow flag. We're not ejecting anybody from the game. There's no verdict that CRM is finished, but this is a huge warning sign. This is red flag, and we have to acknowledge it. Now, as promised, I told you in the beginning of the video, I'll share with you one stock, which I just removed from my top 25 stocks list. Now, on my Roik Academy page, there is a list of 25 top stocks at any given moment. Sometimes I'll remove a stock, sometimes I'll add a stock, and every time I do so, I post a deep dive about why I did it. Very lengthy deep dive, and this was no different. My Academy members have gotten the full scoop. And today, I'll give you the executive summary. And obviously, because it's a huge stock and a very popular stock, a lot of people would disagree with my choice, and I get it. But look at my track record. Not bragging, just pointing to facts. I've made mistakes, sure, but over the past few years, Palantir, Tesla, the 9 stocks I was bullish on in 2023, all the way to today, have made on average 300%, 8 out of.
To Tom's point, I'm never going to catch 300% moves. So I will give him that all day.
9 of them went up, 1 went down. I talked about HIMS and talked about a bunch of companies. My system of analyzing fundamentals and letting the market do its thing over the next 3, 4, 5 years is undefeated. Now, we may get a few of them wrong, but for the most part, if you buy good businesses and you hold them for a long time, you're going to do just fine. Now, with this particular stock, here's the thing. I have chosen to drop Google from my top 25 stocks list. And I'll explain why before everybody's head exploding. Right? They have a huge threat from AI LLMs. The search that we used to use back in the day is being disrupted and replaced by AI agents. And
this I agree with. I agree with so much. How many times now are you, instead of Googling something, are you going to Alexa? I have to say it quietly because there's Alexa over there. How many times are you going to Alexa? Or how many times are you asking ChatGPT the question? Because I don't want to search through all the links. I don't want to go through pages and pages to try and find something. Tell me the answer. That's all I want to see. That's all I want to see is the answer. So I completely agree with Tom in that regard that Google has a real problem on their hands.
Before you take my head off, think about it. How many times you went to ChatGPT instead of to Google search over the past year? The whole business of Google, the ads, is dependent on people using Google search, and that is being disrupted. On top of it, they have a huge competition coming up from Meta and TikTok, even on the video space of YouTube. And I'm a huge fan of what they're doing on YouTube. I get it, but it's being disrupted. Now, cloud, they're good. They're growing 30% per year, but they're not threatening the dominance of Amazon and Microsoft. I mean, they're good, but it's pretty much, stagnant. On top of that, they have regulatory issues, which are still unresolved. Who knows how that figures itself out?
I'm going to stop this video right here, and I'm going to answer Ghost Trader. Ghost Trader, not in the least. But what I want to do is I want to give some perspective. A lot of YouTubers that I talk about, Tom included, no offense, Tom, push things like AMD. Now, when I first started covering these type of videos, maybe about a month ago, AMD, in fact, January 6th is when I started covering these type of videos. AMD was at $125. And I saw all these videos saying, hey, buy AMD, buy AMD, buy AMD. AMD is now down 22% in the span of less than 2 months. Does that make me better than them? Not in the least. But it gives a different perspective. And that's what I want to do, because I see these videos just like you do. And my thought, because I can have a platform, is, you know what? I don't think people need to be buying this right now. In my opinion, it's a terrible place to be. And I can disagree with Tom that Tesla is a terrible place to be right now. I can even do that while driving down the road in my Tesla. That Tesla, the stock, is a terrible place to be. It can be an incredible company, but a terrible stock, right? All stocks are bad, but every once in a while they behave. Tom happened to say, Ghost Trader, we love to get roasted. This is hella fun. Don't take it so seriously. Also, it does get the views. Tom knows. Jeremy got 75% last year, and you know what? That is cool. Good for Tom. Good for Jeremy. I had 92%. And if we're going to measure bananas, right? Someone's going to have a bigger banana at the end of the day than somebody else. And you know what? That's part of the game. So let's shift gears and let's do this. Let's rank Tom's video. Now, y'all know Tom is in the chat, so this is going to be fun. but let me introduce myself real quick. I don't know if Ghost Trader knows who I am. But my name is Christopher Yule. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards who are the best traders of all time. And Ghost Trader, you're more than welcome to go watch the videos on my YouTube channel. I got receipts all day. I've been successfully trading since 2009, and this is where outliers like us save time, make money, and start winning with less risk together as a team. Now, of course, I want you to rank Tom's video and go ahead and subscribe if you haven't already. Here's what we've gone through this week. We had one trading psychology video that was absolutely like gangbusters awesome, beyond legendary. And we've had a couple that were just the worst I've ever seen. Let me see where I'm going. Let me see where I'm going here. I don't want to be easy on Tom because Tom's a friend. Those are some pretty rough picks that he was talking about as far as prices going up on things like Palantir, things like Tesla. I'm trying not to be just an outright asshole. I'm gonna throw it into I'll give it a 3.3. We got 6s though. We got no Lars. No, you know the deal. You knew this was coming. Nobody gets a 7. By the way, my housekeeper just walked in the door and I probably scared her to death. We got 4s, 6s, 8s, 4s, 5s. Nobody gets a 7 because a 7 is like the I don't want to hurt anybody's feelings number. So I like to make sure nobody gets a 7. I've got a yellow card. Sit on the bench. Tom says he wants it to be a 2. Let's just give him the 2. That's what he wants. Let's give him the 2. It's over for Tom. He got a 2. All right. So let's go to today's member highlight. This is actually a really, really strong lesson that I wanted to go through. We're going to be running out of time here, so I need to make sure that I am kind of concise with this, but it's a very, very good lesson. All right, so over in our Discord, Gimme 312 had an issue with some options that he owned on Juniper. Let's go look at Juniper stock real quick. JNPR. So Juniper stock, he bought some puts, some 37 puts as it was going down. And yesterday he was a bit upset, and understandably so, because when he looked in his broker, it said they were worthless. And he said, how can these be worthless? They're in the money. There's no way this can be worthless, right? And so I took a moment. I went over and I screen grabbed a, that's too big. I screen grabbed an options chain right here. So at the time, it was $35.99. Juniper Networks, $35.99. He was in the March 21st, 37 puts. And he said, it shows 0 in my account. The issue, though, was that the strike that he chose was very illiquid. You can see you've got these in the hundreds or the thousands, and then the particular strike right here has no liquidity there almost. And after hours, these things widen out like crazy. Like, don't be surprised if you look at it after hours and it's like nowhere close to what you would expect. And so to see this 35 as the total of open interest, I wasn't really surprised to see it having 0, but 245 as the bid and ask spread there. So I said, your options are currently worth $1.01. And you get that by taking the strike price minus your current price. The strike price was 37. The current price was $35.99. It says that's how much moneyness that would have, because they are in the money. You can't have a option that's worthless if it's in the money. And because of that spread of the low liquidity right there, I like to have at least 250 contracts, of course, as many as I can. But while it might mark 0 in your brokerage, you could more than likely get filled at 101, but maybe even higher. I saw Bob actually had a really great point. Bob in the chat was like, he would probably get even higher than 101 because of the theta value that's still associated with it. So give me 312. It can absolutely be a little bit frustrating to log into your broker and be like, what the frick? How is this worthless? But it definitely has plenty of value with it. And Juniper Networks is trending downward right now. And it might be a great play, but you definitely have a couple order blocks to get through. So with that out of the way, I really appreciate Juniper. I'm sorry, not Juniper. Gimme 312. Gimme 312 allowing us to talk about that. And be sure to share your stories in the Discord. The first rule of Outlier is you stumble over the words and you tell everybody about it as well. And you hit the like button. Now back to trading. We don't have a lot of time, so I got to be quick. What is Outlier and how does it work? Well, old Uncle Warren would say, be fearful when others are greedy, and greedy when others are fearful. An Outlier tells you if an investor is reacting irrationally fearful or greedy, and by how much, allowing you to get into the stock before the Outlier move happens. Now you can get into the annual pass for just 82 cents a day over at outlier.com. And if you're on a monthly trial, just send us an email and we can upgrade you and we'll take it from there. Now, my style of trading, I call the golden ticket trading strategy, and it's where only price pays. I want to see the 10, in this case, we're bearish, 10 under the 20, price under the 50. Let's go to the SPY. SPY's down at 1.4%. We are crashing. We are crashing at this point. This is ugly. This is really, really, really ugly. And that's okay, but it's also what I've been calling for since January 27th, because market breadth had peaked at that point. Market breadth had peaked at January 27th and had been falling since then. And so I wasn't at all surprised, right? We had been going sideways for months, and now we're actually seeing the market trend catch up with the market breadth. Next, let's go to the master key. The SPY still has a sell signal. The market trend is bearish. Sector breadth is mostly bearish. There's a couple bullish sectors, but overall market breadth is bearish as well. Now, before we look to add any new trades, and spoiler alert, I don't have any new trades today. Before you add a new trade, you want to take off any other trades or reduce the risk in those trades by moving your stops. In this case, for me, we're going to be looking at my exits here. So is the 10 EMA broken? I have one trade on in IBN. Oh, geez, hang on. I know that was at 2820. IBN puts on IBN. And this has worked out decently well. There's no order blocks in our way. The 10 EMA is moving down, so it's not broken right here, and it's not above the half ATR from entry. So no problem there, no problem there, no problem there. Now the outlier heat map, that's where we got a problem. If I go to IBN on the heat map, one of my rules is that if the heat map stalls, then I'm no longer interested in it. And what does that mean? The heat map stalls is kind of like it loses momentum, right? It's losing momentum on the sell side in this case. People are getting complacent with the fear, I suppose you could say, rather than getting more and more fearful. And once this loads in, there we go. And let's change it to the 3-month view. Six Strings is making bank on his Tesla puts. Okay, so this is the number I wanted to show you here. Look over here, it shows the heat map value. And when we got in, it was R11. Yesterday, it was R12. Today, it's also R12. So that's a stall for me here. The sector continues to get more bearish, more fearful, less greedy. And the stock itself, however, seems to have stalled right there. So the great thing about this is that I didn't have an expectation on this. Not at all, right? I didn't expect to win. I didn't expect to lose. I just expected something to happen to cause me to take one of my exit signals. And that thing has happened today. So I'm going to go ahead and I'm going to take it off. Now I'm going to pop open trade here. The IBN is bigger. IBN 30 puts is what I'm in. So currently says the price is 205. We go to my other screen in the business account. And I'm going to close the full position. Close position full at 2. Let's try 206 just for fun. Let's try 207 just for fun. Working 207. Let's try it again. Replace. Let's try it again at 205. Build at 205. I am out of IBN at 205. And to Tom's point, I will never catch a 20 banger. Never going to happen. Never going to happen with the way that I trade. So let me tell you what I got on this at 205 was my exit point. 205. Now, was this a huge win? No, not at all. Was I expecting it to be a huge win? No, not at all. But in the context of the stock, it went down 79 basis points. That's not very much at all. However, the option, I bought it at 190, I sold it at 205, and that was a 7.73% gain on those options. So the next thing that I do here for full transparency is I go into the Discord and I update where I got out. But let me find a closing thing real quick and I'll copy it. There we go. Then I reply to this one so I can keep track. Right there. So today is 2/27/25. Trade number 1 closed. IBN. 321. 30 calls whereas 205. And the reason was heat map stall. I had a 7.73% gain, which is not much. I never said it was going to be. That's just part of the game. Account impact was 1.55%. So I grew my account 1.55% from the one trade. So my results year to date so far are, I mean, they're okay. They're nothing special so far, but that's all right. I've only had 3 setups so far. Year to date return 3.37% and a 66% win rate, right? That's part of the game. But I've not lost any money in January. I've not lost any money in February. Will there be months where I lose money? Maybe. I had one losing month last year. Or there'll be months where I make tons of money? Oh my gosh, yes. So this is just part of the game. And that's why I like to say there are no expectations for the stock. I don't know where it's going to go. But I know one thing. I will follow my exit plan no matter what, hands down. Now, I am done with trading, but I'm not done with you. I want you to put in the chat what stocks you want to take a look at. Put in the chat what stocks you want to look at while we got a few minutes before the market closes. I saw somebody say Costco. Well, let's go to Costco. CSCO. No, it's cost. COST. Yeah. All right. Even though I just gave them a lot of money when I really shouldn't have, but you know, it's just so easy to grab those shirts and such right there. Yeah, Costco, you got your 10 is still over the 20, price is still over the 50. Technically, this is still a bullish trend. However, you've lost the short-term trend right here on the 10. You've lost the intermediate term right here on the 20. So for me, this is not a beautiful trade setup right here. Like I always say, I would have got out under the 10. It's not too far off. Costco's $1,000 stock now. Geez, the last time I saw it was like 300. When did that happen? Yeah, the last time I saw it, it was 700, I guess. Wow, good gravy. So yeah, Costco looks rough from here, but what doesn't look rough from here? I bet I put a lot of these on the screen and they all look rough from here. Fubo. Oh, this is a Jeremy stock. I remember. Yeah, giant overhead order blocks. You've got 1, 2, 3 overhead order blocks right here. It did have whatever news was announced. I think it had something to do with Disney. That's a 360% gain right here. Closed under the 10-period moving average, which needed a while to catch up, of course. Closed under there on January 16th, and it's been drifting sideways since then. It's not quite to a bearish trend right now, but you do have earnings coming up, and that, I don't know where that's going to go. I am picking PJ because I saw the green guy right there, and I was like, what is that? ALV. ALV. Okay, you got your 10. The trend is still technically bullish, although it's very sideways, obviously. Very, very sideways. But it's closing under the 50 here. It's closing under all the key moving averages. This is not one I would hold. Not one I personally would hold. Joe wants to look at ANF. ANF. Oh, please tell me you're short in this one. Please tell me you're short in this one. When we look at a trend, this is what you want to see. A beautiful, obvious trend like this. But every once in a while, the trend might bend. But in the meantime, look at it go. That's what you want to see in a short trend right there. It does have some order blocks around 97.90, so it might bounce there. You got earnings coming into the next few days, so I'm not 100% sure. But yeah, this is clearly in a downtrend. Beautiful downtrend, by the way. Half ATR from entry price. So the ATR is the average true range over the last X number of periods. Let's go to IBN. For me, that is my stop loss point. That is my one stop loss point. If it breaks over half of an average range over the last 14 periods, which in this case was 40 cents, so 20 cents up. If it breaks over that point, that is a exit point for me. But it doesn't have to be for you. That's my personal stop loss. SO. It's a beautiful trend. The issue with SO and other stocks like this is that the market is pushing down hard. The SPY is going to close down over 1.5% right now. We're at 1.58%. If that weren't so strong against this, this could be up even higher. Now, keep in mind, relative strength like this compared to the SPY, right? Relative strength when, good gravy. Relative strength when a stock looks like this and the market looks like this. If the market were to turn around here, it could like slingshot it. It could slingshot it even higher. Double bounce on a trampoline, kind of jump right there. But so it looks actually really beautiful in a market that's hurting. I've been telling y'all this before. When we have a real sell-off in the market, which we still haven't even seen yet, it's going to be brutal. We're down 4.5% right now. I actually think we bounce here. I think we come up. This is Chris's just guess. I could be 1,000% wrong because clearly I'm not putting my money on it. I could see something like this happening. This is what I think might happen. I think enough people are going to step in and say, okay, we want to buy this dip right here. It pushes it back up. But unless market breadth can turn around, I think we see the same thing happen again. So that's what I think might happen. But I'm not afraid. I have $0 at risk in the market right now. Literally $0. VRNA. Again, another stock that is just like relative strength off the charts. Look at this outstanding trend. This is what you want to see in a stock. You want to buy stocks that are trending up and then get out of the way and buy and not be in stocks that are trending down, right? That is gorgeous. That is so nice. Then you compare it to Tesla. You compare it to Tesla right here. VRNA up 5.86% today. That one looks great, my friend. You better be right. Okay, we just did VRNA. Yes, you're correct. I own nothing right now. You literally just saw me close my one position. I have nothing on NTR. Because cash is a trade, my friends. Cash is a trade. It's hard to believe that a trade would hold cash, but I hold cash until I get a signal. And then I go in, and I go in deep. So this one has an order block right here. It's been fighting through this area. Definitely bullish trend. But again, with the market coming down like it is, this is going to be a lot of trouble to get through, because this is an area where a lot of people are going to be looking to sell. And if it can't get through there while the market's going down, I don't know where it's going to go, but it doesn't look, it looks difficult to get through. I put it that way. PJ wants to look at gold, GLD. Gold's been on a nice run lately, but that run might be over as of today. Look, it crossed under that 10 EMA and closed under there. I want y'all to always remember the 10 EMA is your short-term trend. Look at this. A first close over was right here. It didn't close under the 10 EMA all the way up till here. So that was a 10% move in gold in the span of 32 days, and you had zero stress all the way up. But it's now closing under that point. Not sure where it's going to go from here, but that's not very bullish to me. Gainer spot. Thanks, Chris. You saved me so much money this week. Closed gold yesterday. Actually, that was a really good move. Look at that. Outstanding job. Outstanding job closing yesterday. So SO is all I have left right now. Outstanding work. Great job. All right. Baba is going to be our last one of the day from ESAT. Okay. Alibaba looks incredible. Look at that trend. Absolutely glorious uptrend right there. Man, I couldn't even say anything wrong with it other than it's got an order block sitting up here that it might struggle to get through. But Alibaba, that's what you want to see. That's what you want to see. Don't emotionally destroy him. I don't want to. I'm not trying to. I'm just trying to give y'all some objective perspective, right? I have no skin in the game at all whatsoever on any of these. And that's why I like to give you this feedback, is because I can look at it absolutely clear-headed. And whenever you're in a stock, you can sometimes get emotionally involved in it and not see the bigger picture unless you have a second set of eyes to take a look at it. So I love to do this. I'm so glad to be able to do that for you, right? So I am now in 100% cash. Sewerk has emotional damage. But real quick before we go, if you are an influencer of any size and any niche, we want to work with you. Send us an email and let's start working together. And of course, tell me what you're trading in the chat and come back tomorrow where outliers like us will help you save time, make money, and start winning with less risk together as a team. YouTube is going to pop up a couple recommended videos. I recommend you click one of them. And now I recommend you to have a fantastic day.